Hi, my name is Oluwasesan Adeyeye from ARM Investment Managers, and I'll be taking you through the macroeconomic and financial market event for July 2023. Nigeria's composite purchasing managers index was at 51.7 index point in July, a touchdown from 53.2 index point in June. This indicates a moderate improvement in Nigerian private sector activities amidst elevated inflationary pressures. The moderate improvement was underpinned by weak growth in output and new orders. Although, during the review period, there was a notable improvement in employment as the rate of job creation rose fastest since January. At its fourth meeting of the year held in July, and the first meeting chaired by the new acting CBN governor, the Monetary Policy Committee raised the monetary policy rate by 25 basis points to 18.75%. The asymmetric corridor was adjusted to plus 100 minus 300 basis points, previously plus 100 minus 700 basis points around the monetary policy rate. According to the data published by the National Bureau of Statistics, headline inflation further increased by 38 basis points to 22.79% year-on-year in June from 22.41% year-on-year in May. This was on the back of persistent pressures across the food and the core baskets. In the Nigerian equities market, the market recorded gains for the third consecutive month in July as the all-share index rose by 5.53% month-on-month. Consequently, the year-to-date return increased to 25.53% in July from 18.96% in June. During the review period, the best performing sector for the month was the oil and gas sector, which gained by 20.05% month-on-month, and this was followed by the industrial goods sector, which gained by 14.17% month-on-month, and the banking sector, which gained by 3.84% month-on-month. On the other hand, the insurance sector lost 5.89% month-on-month, and the consumer goods sector suffered losses also in the period by 4.58% month-on-month. Going to the fixed income market, the secondary fixed income market closed bearish in July as average yield rose by 45 basis points month-on-month to settle at 10.11%. The 25 basis increase in MPR by the Monetary Policy Committee at the tail end of the month supported the northward trend of fixed income yields. Specifically, average yield at the secondary treasury bills and bonds market advanced by 78 basis points and 12 basis points to 7.12% and 13.10% respectively. The Debt Management Office offered 360 billion naira in July but raised 656 billion naira through reopenings of the 2029, 2033, 2038 and 2053 FGN bonds. The participation level was higher in July compared to the last auction held in June, as reflected by the bid to cover ratio for July, which was 2.63 times, which was higher than the 1.76 times recorded in June. Consequently, the average stop rate across all tenors declined by 13 basis points to 13.63% from 14.94% recorded in June. At the Nigerian treasury bill market auction, average stop rate rose by 63 basis points to 6.41% from 5.78% in June 2023. The participation level was lower when compared to the auction held in June, as the bid to cover ratio for July stood at 3.19 times compared to 5.62 times in June. Our outlook for the economy and the markets. Following the removal of fuel subsidy and FX liberalization in June, investors have continued to assess their impact on businesses. Going into the equities market, we expect profit-taking activities to dominate the market. The ongoing release of missed Q2 2023 earnings will continue to drive investors to reassess earnings outlook amidst elongated economic headwinds. Nevertheless, we expect the banking stocks, particularly with net long positions, to make windfall gains in form of revaluation gains. Also, we see resilient performance from the oil and gas, the telecommunications and the cement sectors. Going into the fixed income market, we expect the monetary authority's decision to be driven by the need to curtail the high inflation rate and improve capital inflows. Hence, we expect this to further support a rise in fixed income yields in the near term, an indication that the negative real rate of returns may narrow. A quick recap of what we've discussed so far. Nigeria's purchasing managers index expanded at a lower pace in July, signaling moderate improvement in private sector activities despite elevated inflationary pressures. Inflation maintained an upward trend with the highest figure in over 20 years. The equities market recorded a gain for the third consecutive month in July. Average fixed income yields rose at the secondary market for treasury bills and bonds. In conclusion, we anticipate an increase in fixed income yields in the near term. And for the equities market, we advise investors to invest in value tickers in the banking, the oil and gas, the cement, and the telecommunication sectors. I hope you found this insightful. Should you have any further questions or inquiries, please do not hesitate to contact your relationship managers or our customer care representatives. Remember, we remain invested in your tomorrow.